Okay, fam. So in this video, we want to look at how to set stop loss in the spot market. Now, basically, each and every one of us will go into investment to make money, right? So it's very important that we manage our risk properly. And then in trading and investment, there are several forms of risk inherent to trades. For instance, you have the market risk, you have the margin risk, you have the liquidity risk, you have the volatility risk, you have the overnight risk. And as a good trader and investor, you want to be adequately at all times managing your risk properly, right? So now in this video, we want to see one of the ways by which you can manage our risk properly, which is setting stop loss order in the spot market. So what is a stop loss order? A stop loss order is an order that tells Binance to sell your assets at a particular price level to cut down losses. Yes, yeah. Well, Binance will sell that to cut down losses. So you believe that at that particular level, which is a support that has been broken, the price goes below that level, it can continue going down, right? So you don't want to incur additional loss on that position, so you just set a stop loss. If it gets there, you are taken out of that trade. But then at the same time, we don't just only want to set stop loss, we want to make it because we are not certain if our stop loss will be triggered before going to profit. So to be on the safer side, we want to set two orders, right? That at the same time, if it gets to profit side, you will make money, because that's the primary reason why you bought, right? Because you want to make money. And if it gets to if it start going against us, we should be able to do what? To cut our losses. So the other type we will be using for this example is the OCO. And you come to this place where you are seeing the limit order, you tap it. Once you tap it, you will see the limit, the market, the stop limit, and the OCO. So you tap the OCO. The OCO order is basically a combination of the limit and the stop limit order. What does this do? It does because now, for instance, in the market, you just bought, maybe after your analysis you bought or your research, and then you are seeing a resistance. You don't know if the market can break that resistance or the market can go below that resistance, basically. But then there's a price level where you want to take your profit. So say for instance 50,000, which is a price level. So I want to take profit at 50,000, but I'm not sure if BTC can get or go above 50,000, or BTC will start rejecting. So what do? My take profit target is $50,000, and then my stop loss at the same time is what? That's $8,000, right? So what do I do now? Because I don't want to just set only sell at 50,000. What if it goes against me and I will lose the money? But then I don't know if it will actually happen. I hope you are getting my point, right? You don't know which will happen, whether the take profit to get to meet first or the stop loss to get to meet first. But then to be on the safer side, that you don't miss out, so we'll be using these two other types. Now you will set your take profit target at $50,000. This is where we'll set that. So if the market gets to $50,000, we will be in profit, and at the same time we will come here to set our stop loss order at where? $38,000. If the market drops to $38,000, we'll be losing money. So the Binance will take us out of that trade. But then you observe that they see another price there that it says stop price. Now this stop price should be like a price above your stop loss price. It should be some points above your stop loss price, just like a doorbell, a notification that notifies the stop price order to get ready to be filled. Say for instance, in our various homes, most of us have the doorbell, right? So if someone wants to come to your house, the person will most likely ring the doorbell to get your attention to come and open the door, right? Or the person will knock on your door to get your attention to come and open the door. So that's basically what the stop USDT you are seeing here is for. It basically informs the stop loss price that, guy, get ready, you need to do a work very soon. Okay, so now, but then it should be some points above the stop loss price. Say for instance we have the $38,000 also as our stop loss price, so you can actually see 38,500 as what our stop price. So it means that if BTC goes to 50,000 before coming down, we will take profit there and we'll make money. Then if BTC perhaps drops down to 38,500 and eventually gets to 38,000, we will make money. But then if BTC gets to 38,500 without getting to 38,000, the stop loss price will not be triggered. Or if BTC perhaps jumps 38,500 and get to 38,000, you will not be making money. That's basically how OCU work. So to use the OCU and set your stop loss, most likely it helps so you don't miss out. If the market pumps, you will catch the pump. If the market dumps, you'll be taken out of the trade and your losses will be cut short. So now I'll just click 100% to sell my BTC at 50,000 or at 38,000, and then I'll click sell BTC. So once I do this, you see a screen to confirm the transaction just popped up. What is it saying? It says sell BTC at where 50,000. This should be above the current. This should be above the price where you are considering for your stop loss, 50,000, and then the stop price 38,500, and then 38,000 as the stop loss price. This is the main stop loss price, and then 50,000 is the take profit price. So, and then I will confirm. So if I confirm, it will bring out two orders for me. The number one is take profit at $50,000, which is a limit order. If BTC gets there, I'll be taking her. And then the second one is a stop limit order to sell BTC at 38,000 if BTC drops to 38,500. So this is basically how to set stop losses in the spot market. Okay, so fam, kindly subscribe to my YouTube channel. Drop your questions, your suggestions, and your feedback. I will certainly attend to them. Okay, thank you, love you, see you next time.